Ladies and gentlemen, welcome to our fifth episode of the Thrive in China Roundtable. The purpose of the Thrive in China Roundtable is to bring a group of China business professionals together to discuss issues that may arise with doing business in China. Every week, every roundtable, we talk about a different subject or a different pain point, if you will, that affects people doing business in China, being successful in China, and ultimately thriving in China. I hope you get something out of these roundtables. We are here to help. And obviously, if you do have any questions or want to discuss any of these pain points, then don't hesitate to set up a call with us. Just to get started on this week's roundtable, for those of you that are new to the roundtable, I would love to understand what your background is. So if you are new, let me know. Are you a newbie in China? Found an opportunity and looking to explore what that actually means? Are you a startup in China, meaning that you've already transacted and you're wanting to understand whether you have to incorporate or basically take that next trigger step? Or are you an experienced China hand who's just looking for new and fresh ideas? Let me know who you are. It always helps me to tailor make these presentations and these discussions. A little bit about myself. My name is Christina Kohler-Coluccia. I'm the head of business advisory at Woodburn Accountants and Advisors. We are a family-owned business, and for the last 18 years, I've been helping foreign investors with their market entry into the Hong Kong and China market. What we do is we help companies in their pre-investment stage. We then actually implement the structures that they're looking to do in China. And ultimately, we help them to grow and scale in the market. Our background is in finance. We focus on the accounting and tax functions in relation to our clients' companies. And we make sure that our clients have corporate governance as well as compliance implemented within their structures. We have created administrative processes that help to aid companies with their growth and scale in China. I've listed them here. If you're interested in watching these recordings, they are up on our website and they're free of charge. And before we start today's presentation, just to remind you, we have, for those of you that are part of the roundtable and are joining in, we offer a free copy of our ebook, The 10 Biggest Mistakes Companies Make in China. If you would like to have a free copy, email me at christina@woodburnglobal.com. So roundtable 5 of 2023 is The Price is Right. Is your company in China on the money when it comes to cost structure? Now, pricing is everything for new companies in new markets like China. Nowhere is the issue of pricing more important than in China, home of some of the most exciting and highest stake ventures on the planet. But one of the biggest challenges that startups face is how to implement pricing strategies to gain a foothold in the market, drive sales, and eventually generate profit. And what makes pricing so vital and difficult is the fact that it determines your market position, whether your customers buy from you, and whether you can provide the level of service required by those customers. Setting prices too low or too high can have a significant impact on brand perception and market share, and may result in far less sales than, or profit even, than anticipated. So you would think then that something as fundamental as pricing or cost structure would be the one thing that companies would be determined to get right from the outset, right? Especially in China, where startups and SMEs account for 95% of all businesses. But this is clearly not the case, because a report recently found that 18% of all startup failures in China are due to pricing issues. So could it be that business owners, leaders, companies in general are too tied up in the administrative side of setting up the business versus actually, and then overlooking the basics of the business? Or is it a question of misunderstanding just how important pricing strategy is and the need to pivot and amend straight away if it's not going in the right direction. In this roundtable, we are going to shed some light on this and help companies hit the ground running. Basically, it's a guide kind of to getting your pricing strategy right from the beginning. So tip number one, or guide number one, if you will, would be don't get sidetracked. Now, China is clearly a great place to do business. We know the success of a lot of companies that are in China, but the technical, administrative, and financial aspects of setting up an entity in China are overwhelming and daunting. I remember when I set up my company back in the day in 2003, literally for the first 4 to 5 years, 50% of my time spent was on administrative tasks, mostly HR issues, versus in the business doing benchmarking, looking at our pricing, looking at our competitors, looking at our service line, understanding if we could pivot in any shape or form. Okay. Now, the cost and the time involved in these early stages of your development in China can get you sidetracked, that you don't focus on what is critical for that business at that moment in time. So although it's easier said than done, my first tip is try not to get sidetracked. Understand where your focus should be placed and where your decision-making should be centered on. Tip number 2 is know your target audience and market. Who are your potential customers? What will persuade them to use your product or service? Now, this depends on the perceived and real value that your offering brings. One of the most common pricing mistakes that startups make is basing their prices on cost rather than the customer's perception of value. Pricing is not black and white. It involves a deep understanding of your customer's preferences, their reasons for engaging with you, and to know your audience. And this is whether you're B2C or whether you're B2B, you need to know your market. Be sure that you are conducting a thorough market evaluation of your customers' values and priorities, and never forget to profile the pricing models of your competitors. Do your competitor benchmarking. Just as a reference, I do competitor benchmarking once every 2 years, just to make sure I understand. And I'm in the service sector, okay? So I'm not trading or anything like that, but my service is my product. I evaluate what the service line items are of my competitors. I evaluate the costs that they associate with each of those line items. I get a lot of insight into how either nitty-gritty they go into detail or that they don't go into detail. So it's really important to target your audience. And this helps me to then discuss with my potential customers on what are the differences between my service and my competitor services. The third tip I'm going to give you is to choose a pricing strategy. And by all means, we don't have to choose just one, okay? You've got to remember that the price and value are in a constant state of flux, okay? Pricing is where value and money meet. And a key lesson about costing can be found by the following example. I'm giving you a very, very, very basic example. You've got a farmer's market where sellers were at the mercy of the local cooperative that cleared the transactions. The farmers had no influence on price because they were selling to one person or one cooperative versus selling to a target of customers. It was the cooperative that ultimately was then dealing with the pricing strategy to the end consumers. Now, this taught the farmers a painful lesson. Never run a business in which you have zero influence on the prices you charge. Now, I say this, we can reflect this on distributors in China. You are working with one distributor in China. That's your one client in China. What you sell to them is probably a fixed pricing structure, but they are probably now dealing with the pricing, pivoting on the pricing to, I don't know, third parties or to end consumers or to B2B customers, whatever the business sector you might be in. And they are the ones that are changing. You are remaining static and you have zero influence. Now, this experience begs the question, how much influence can you really have on price? And if you do have an influence, how can you use it to your advantage? And this is where a pricing strategy comes into play. Now, one of the biggest issues that I see, or I don't want to say issues, one of the biggest pain points that I see with a lot of clients who use distributors in China is the fact that they do not have transparency and clarity over how the distributor is selling and what that pricing structure is. In order to be able to thrive in China, to grow and scale, you need to have transparency over the entirety of the supply chain so you can understand when it is time to increase your prices and not. And this is ultimately putting these decisions then in your control rather than relying on the distributor who's not being transparent with you. Okay, so the advantage of using the distributor is you just outsource, right? The disadvantage of using the distributor in many instances is the fact that you don't have this clarity and control. So I want to talk about the most common strategies, pricing strategies. And the first one is maximization. It's really, really important to differentiate between sales maximization and profit maximization. And the difference is that sales maximization refers to the revenue. You want to get as much revenue out of your sales as possible, whereas profit maximization is looking at your high net profit. Now, when you're starting up in China, you want to focus on sales maximization because you want to hit the ground running and you want to sell, and build that sales pipeline. Profit maximization usually comes at a later stage within your long-term strategy, but profit maximization cannot happen if you are in this growth phase where you are reinvesting capital into the business. So remember, focus, sales maximization. And as I said, when I'm talking about all of these strategies, it's not that you choose one, you choose multiple, okay? And then you pivot, you got to change. Premium pricing is where prices are set higher than your competitors. It's often associated with luxury goods, unusual goods or services, and those where you are giving an impression of very high quality, better quality, Western quality, right? And normally when you're doing premium pricing, that comes hand in hand with specific marketing techniques to really shape the perception to your customers about what the value is that you're bringing in, okay? Now, premium pricing means you are top of the market, right? Penetration pricing is often used by startups in China who have funding behind them, where they start off by first setting low prices. They gain traction and a foothold in the market. They start drawing customers away from the competition because they've set lower prices than the competitors. It can result in a loss of profits, but this is where you're thinking about profit maximization, not profit maximization. You're thinking about, sales maximization, not profit maximization. And slowly over time, you are increasing your prices to then fit your competitors. But because you've taken those customers away, you've started with a whole loyalty strategy, you are keeping them even as your prices are going up. Again, value of product, value of service has to be part of this as well. This is a true value of Chinese customers. Again, whether consumers or B2B, they want to understand what added value is coming with that price. Now, price skimming is where prices are set very high at the beginning, again, to maximize profits, right? So you're away from the idea of sales maximization, you're in the idea of maximizing profits, okay? Profit maximization. More competitors enter the market, the prices dropped to attract more price-conscious customers. And you can see this actually with smartphones. When a new product or model comes on the market, it is selling for exorbitant pricing. Over time, it becomes not the latest version, it just becomes one of the newer versions, and they lower the price to make room for then the newest model to come out. And they're actually, iPhone, right? The iPhones are a perfect example of this. When a new iPhone comes up, There's a marketing strategy behind it. The cost is like, I don't know, 1,500, 2,000 euros for one. But then all the other models become cheaper and cheaper and cheaper, right? And they're basically being replaced over time. Now, price anchoring is usually utilized in the retail sector. And anchoring is when a business places premium goods and services near standard options to give the impression that the standard option is actually a discount or a bargain. So again, you have to understand your market. You have to understand what your competitors are doing to see whether this actually makes sense for you if you are in the consumer sector. Then you've got psychology pricing. And this is where pricing is set at psychological levels, such as, I don't know, 599 RMB instead of 600, right? It makes the product seem appear cheaper, or you do it at 549 RMB. It can work both ways. Some companies do that so that it appears that the service or the product appears cheaper. You see this a lot in the education sector when trainings are being offered, is being offered at 599 or 549. Some companies charge the exact price, 600, but that's because they're showing the quality that's coming with it. One is probably looking for mass consumption. The other one is looking for quality of customers that are coming in. So it also depends on who you're trying to attract. Are you looking for mass numbers? Are you looking actually just for small quantity, right? It really depends what you're looking for. Now, the strategy you choose should be governed by a number of factors, right? And again, I want to reemphasize, you're not just looking for one strategy, you're looking for multiple strategies, and you're also looking to pivot, okay? Now, what you need to look at is the value of your product or services from the customer's perspective, not from your perspective. So if you are in a products sector, especially consumer, one way to go about doing that is focus groups. Analyze what focus groups think about your pricing structure. Get feedback on that. If you're in the B2B sector, it's about talking to potential clients and understanding what is their threshold. Obviously, if you are not selling the value behind a product and what else is going to come in as an added value, you know, they're not going to care about the price or why you're expensive. You really have to sell that more than the product itself. You got to compare yourself with competitors' products and services. Okay, I use that a lot in my sales spiels because I know exactly what my competitors are charging. Exactly. And I also know in many instances where we differ in terms of value of service and how we come into it. It is then up to the potential client to decide whether they like that or not. I can't change their mind about what we offer. They might say, no, you're going to an extreme that we don't need, and hence I'm not going to pay for that. Could be. But I'm also not looking for mass volume of business. I'm looking for quality clients, a small number that I enjoy working with. So I also have a very different niche, right? And different goal to achieve when I'm working with my customers. Then you got to think how your typical target market customers behave, okay, in China. What is your brand image? And what is your financial backing? All of that will help you to decide how you want to create your pricing strategy, okay? The last tip I'm going to offer for today is to keep your pricing fine-tuned. And this is really, really, really critical. Fee structures, pricing structures are not fixed, right? You might give certain customers, because of the volume of business, discounts. So you're always fine-tuning this. Now, I always tell my clients, create a standard operating process for the sales guys in China that they understand what are their thresholds, how they can negotiate, what are the discounts, who can they give discounts to, etc. But with the understanding that this standard operating procedure is flexible and can be changed at a moment's notice. Okay? Now, I want to reiterate what I said at the beginning. Many startups come unstuck if they fail to adapt when things begin to go pear-shaped. Okay? You've got to adapt your business. Fine-tuning your pricing strategy could save your business from going under when things get tough. Market conditions change. Customer preferences change. Your pricing strategy shouldn't be set in stone. It should be constantly tweaked to meet your business goals. But that does not mean that you tweak it for every single client. It means that on a global scale, not on a global scale, on a China scale, you should be tweaking it as you are in this journey, okay? You shouldn't be afraid to get your pricing wrong to start with, okay? As long as you are not getting sidetracked and you know exactly when to correct it. Smaller startups should not treat bad pricing decisions as uncorrectable mistakes, or think, okay, now we've got to exit the market because we did this wrong. Pricing is not an exact science for anybody, okay? If the initial price appears to be off target, make any necessary adjustments and keep on selling. This is why it's vital to maintain control over your pricing and make sure that is something that you consistently focus on, okay? And one final point, keep maintaining a database of business intelligence information, such as competitor pricing, together with a pricing strategy. Review this on a month-to-month basis with your HQ, with your local team, okay? And don't forget to get expert support when you need it most. And by expert support, I mean working with research companies to do focus groups, to create this business intelligence for you, to do competitor benchmarking, or even to get expert support, something my husband does often whenever we go to a new country. He's in the F&B sector. We go to supermarkets and he's in the confectionery section. We go and explore how prices are in different countries, how are they displayed, etc. Right? So remember that this is critical. These functions are critical in the maintenance of your business. And as a general manager, as a leader, as a sales manager, this should be your focus, not on the day-to-day admin side of things, okay? You need to be able to get your business up and running. Mistakes will be made. I mean, this is China, mistakes will be made. Can't emphasize that more. The question is, how quickly do you pivot? How quickly do you make decisions in order to pivot? That is the end of today's presentation. I would love to hear again what your biggest takeaway is from today. Don't forget, we are moving these discussions to our WeChat Thrive in China community. We've got over 250 people on there now. It is China business people to China business people sharing content, advice, and we're going to bring this discussion on there tomorrow about pricing, about the difficulties with pricing in China, depending on what sector you are in. So don't forget to subscribe to our WeChat channel and definitely bring it over. But do let us know what if you've watched today's video live or on replay, let us know what your biggest takeaway was. If you want more advice for doing business in China or Hong Kong, if you've got any pain points, schedule a free 15-minute discovery call to see if we can help you, okay? As always, we're happy to have a discussion. We can't always help, but in many instances we can. And remember, if you've got any colleagues who are interested in our roundtable and would like to sign up, they can on our website. It's woodburnglobal.com/events. And we don't have any roundtable next week. I'm traveling to Hong Kong, very, very excited to be going back to Asia. Definitely will be providing feedback on my feelings and sentiments and what is happening on the ground. But our next roundtable will be on the 22nd of February, where we'll be talking about managed office spaces versus actual office spaces and whether that's a good thing for your China startup. So definitely join in for that. And last but not least, thank you all who have come live, who've watched on replay. If you do have any questions, jot them into the chat. Once we stop the recording, we will take a look at those questions. Otherwise, I hope to see you again on the 22nd of February. Have a fantastic day. Take care and goodbye.